All right, what's going on, everybody? It's Sunday, almost 12 p.m., October 4th. I got Faisal here on the call with me. We got a lot to talk about, from the president and the White House getting coronavirus to unemployment slightly down, but then economic growth slightly down as well. We have oil data coming out showing a lack of demand. Supply is still being cut. Many things happening in the energy industry. We see Yelp data showing there's almost close to 100,000 businesses being closed due to COVID, which are now permanent losses. Um, Lots of information to talk about, but I'm excited to have Faisal here on the call with us today. Make sure y'all hit the thumbs up if you enjoy our content. Make sure you join our Discord channel. The link is below in the YouTube. So let's get started. What's going on, Faisal?
Not much, man. It was a crazy week. I'm glad to have you here after a brief hiatus. I think you've been quite busy on the travel side, so it's good to have you.
I I have been busy on the travel side, but I'm super excited for the month of October, or as people in the finance industry like to call it, Rocktober.
Wait, is that a good thing or bad? Is it going to get rocked, or is that like, I'm
Well,
assuming it's
I
a
think
bad
they
thing?
no, I think they talk about Rocktober as in volatility, right?
Oh,
So
yeah.
we don't really know which way it's gonna go, but that's why I got you here to talk about that, man.
Damn. Okay, well, it looks like those guys are right because just based on this week, this was the first week of October, so we got some good data coming out Friday. We had some jobs number that you and I will talk about in a little bit, but just as far as the market digesting news from Monday, where we had an uptick in coronavirus cases throughout Europe and the US, to Friday when we figured out that President Trump has coronavirus, and that shook the markets a, a little bit. It's been quite a crazy week for the market, but ultimately, I think it ended much better than people expected for sure. I think the broad markets were up. I think relatively up 1%. The Dow was up at 1.5%. The S&P was flat. Nasdaq was up 1%. Oh, I'm sorry. I think the S&P was the best, or the I'm sorry. The Nasdaq was the worst. The S&P was the second to worst, and then the Dow and IWM were actually the best, with the small caps gaining, I think, around 4.5%. They had an awesome week this week, but
Hmm.
ultimately, by the time the closing bell rang on Friday, I really got the sense that there was like a mixed feeling in the market. Sure, you could say that some of it was attributed to what we saw in the news regarding the Trump COVID stuff, but ultimately, I thought the market shook that news off very well, and I really didn't think it was going to be that impactful from the beginning, even though the night before you had seen futures drop to a really high level. I thought the market was going to be fine with that. The real surprise was when the jobs number came out, and we actually missed in terms of how many jobs we added, and I think this was our first miss since in the last two quarters. And so for the people that were expecting a V-shaped recovery in the labor market, this was kind of a dent to their theory, but it could be a sign that the economic slowdown is on the rise. But ultimately, I think with Christmas around the corner, you may see hiring pick up in a lot of these businesses that have cut back jobs, whether they're retail businesses or what have you. They're going to start hiring again seasonally, so that could somewhat benefit, but that remains to be seen. Ultimately, this market closed in a sense where I felt like it's setting up for a pretty ugly week next week. I think you're probably going to see significant selling come in Monday or Tuesday. Like I'm I'm really expecting this to be a bad week. And you could say IWM had a great week. The Dow closed, everything closed positively. But when you look at the leaders, and I'm talking the high growth leaders, um, Fastly, Amazon, Shopify, Nvidia's been very good throughout the entire time. I keep like pushing people. If there's one stock you need to watch, it's Nvidia. But anyways, Thursday, we had an awesome day for all these high growth stocks. They actually got above my key levels. And if you guys were reading my notes on Discord, I'd actually mentioned that, if we saw a repetition of what we saw Thursday on Friday, that I was going to be forced to cover my shorts like Tesla and XLK and a lot of my tech shorts. Um, but the dip Thursday or Friday was very interesting because you had small caps outperform. And that's a risk segment of the market that has been underperforming. And a lot of the risk is attributed because it's deep value. There's, you could be getting it out of value considering if we have a very strong economic recovery, but there's still a lot of risk inherently. And then there's also another portion of the market that's risky in terms of extended valuation. And you can point to the software stocks, the high growth tech stocks, what have you. And so it was interesting on Friday to see IWM do very well, but the small caps, or I'm sorry, the high growth stocks actually did not do that good. And tech broadly closed the lowest out of all the indexes, but it was the high growth stocks that were actually doing very well in the morning. You look at CRM, Fastly, they were all up 2% in the morning. Adobe, I mean, there were a bunch of high growth leaders that were doing great. Zoom was another one that was doing really well because it had opened high in response to the COVID news, and that was rightfully so. It was up 4%, and they managed to take it all down by the close. And I was just like, wow, to see these two portion of risk segments be so opposite. I usually don't see that. There will be some disparity, but ultimately, I like to follow where these high growth leaders are going. I'm not going to really put so much weight into the small caps because I think there's still a lot of inherent risk. But when I start to see these moves, like what happened in Zoom, Fastly, all these stocks that should be going up if this is a healthy market and the market wants to go up from here, they did not, and they pulled back below their short-term resistance levels. So I'm expecting a kind of an ugly early week next week because of that continuation of selling that we saw Friday. So yeah, that's kind of my take. It's going to be an interesting week coming up.
Sounds good. Okay, so let's kind of break down your talking points. So first thing, I want to talk about is you said that some of the high growth leaders like Zoom and CRM or NVIDIA, those are the key stocks that you are going to be watching. Zoom, you said, got taken down pretty much by the daily close on Friday. NVIDIA still looks relatively strong, I think, correct?
Yeah, NVIDIA is still, when you look at the fundamentals, valuation, everything, I think it's still the number one stock to buy, period. And when you start to see weakness seep into that stock, more so than any other stock, I think that's a cause for concern. And it's been really weird because the last, I think, 6 days have been really great for the semiconductor sector, which NVIDIA is obviously the leader of, broadly speaking. But, just very recently, it started to underperform the sector. Same goes for another stock that I like to keep an eye out on, ASML. This is one of the top semi-equipment stocks, and that stock has done very well over the past couple of weeks. It's outperformed peers like Lam Research, AMAT. It's really the leader in the semi-equipment space, and that has started to underperform its peers in the short term. So it's interesting to see, these very strong leaders start to diminish, but ultimately they haven't broken down. They aren't showing any red flags, but it's just that relative underperformance that starts to creep in, and then you start to see them snowball and eventually lead the entire sector down. So if you're someone who's hoping for a downside in this sector, you're starting to see the initial signs build up in the leaders. So once again, it's a red flag.
Yeah, I think, I don't know who it was, maybe it was Mark Twain who said, usually change happens slow and then all at once, right?
Yeah.
And it seems those are kind of the signs that, at least the way I'm reading the market. So I was looking at the bond markets and the Dixie just this past Friday. I usually like to look at the close and how the Friday close happened, how the weekly close happened, then compared that to the equity markets. Bonds didn't really move a whole lot. And again, for the most part, as I've stated before, I'm looking towards the bond markets of the Dixie, to me, is a better indication of what may be happening in the underlying economy than the equity markets do give as a signal. So those markets we can cover in a little bit, and I personally think they're still relatively flat, and they're not indicating any sign of strong recovery in the economy. But you mentioned a couple things. Number one, we saw the U.S. economy, miss its forecast, and it added 661,000 jobs, indicating a slowdown, at least a slight slowdown in growth. Right. We also had the non-pharma payrolls, I think, also come out Friday. So again, this is not really the whole idea of V-shaped recovery that people have been talking about, because if you are supposed to be recovering from a very tough, reeling economy that you've had due to coronavirus, and you think that the economy is better than most think, well, then we should start seeing acceleration of growth, decreasing of unemployment rate, more spending, if you will, but also, more personal income added on, people's books, or rather, people's bank accounts. And it seems like those areas of the market are giving mixed signals. Are you seeing the same thing?
Yeah. I just had an interesting thought. I want to get your take on this. What do you think drives the GDP and the economy forward going into the next 2 years, for instance? Because you're seeing companies, obviously the employment rate's going to be stagnant because, we're going to see a broad recovery in things like the retail sector, hospitality sector, airline sector, things like that. But companies going forward have become leaner. I think you and I would both agree, whether it's due to technology or people have realized that they don't need these jobs because they can use alternative technology to work at home or different things like that. Technology has begun to take shape at a more rapid pace. And ultimately, I think it's cutting back jobs. But on the other side of that, it's also increasing profitability and efficiency for these corporations. So my question to you is, do you think we could still have a really thriving economy, but a somewhat relatively higher unemployment rate going forward? Do you think that's possible?
Well, as per Andrew Yang's vision, that is exactly what he saw going forward. Now, I don't think he was able to predict, coronavirus or things like this becoming such a fast accelerant. But this is what he said. He said technology, robotics, AI are going to start replacing people's jobs, and it's inevitable, right? But the point is, going back to your original point, can the efficiency of these companies utilizing technology and AI and whatnot, will that give them enough profits to offset the job losses that the economy is now dealing with? I don't really know at present moment because, again, we are still in the midst of a COVID environment. We were talking about Europe earlier before the call. Europe is now, again, slowly hunkering down. Spain, Italy, Portugal, was it maybe even England, right? They're starting to see a rise in cases. I mean, overall, Europe is seeing a rise in cases. Spain, I know for sure, is contemplating or has already gone into half lockdown mode. Italy, maybe Netherlands and England, they're also contemplating the same. The other part of that is, from the financial standpoint, these countries were already struggling with their own respective GDPs and the GDP as the EU as a whole. Okay, so if they're already struggling, and by the way, their respective banks, like for example, the Bank of England, Deutsche Bank, the subsidiary of HSBC, which is a Hong Kong-based bank, also in Europe, is also already struggling. You're starting to recognize what you said earlier is there is weakness creeping in. And again, weakness doesn't just happen all at once. Sometimes it does, like the coronavirus black swan event. But other times, when it comes to recessions, when it comes to weakness in the market, it slowly creeps in. There are visible signs that we all know that, hey, wait a second, this number or whatever is happening with unemployment or slowing of growth or maybe GDP taking a hit. These are not good signs. Yet, us being so maybe mentally stimulated into thinking that Fed stimulus or economy or the stock market is always going to bounce back, I think it makes us a bit more irrational. So those are my thoughts. Like I don't think that we actually have a complete picture to understand that efficiency in these companies doesn't necessarily mean that they can easily offset the job losses, because again, just because they're efficient doesn't mean that they're still not struggling with their business overall. For example, Disney cutting 28,000 jobs, okay. Does the business pick up on the other side to, balance that and say, you know what, Disney is now more profitable as a company? I don't think so, because I'm not seeing, people piling into droves into Disney or, going into their theme parks or buying Disney Plus subscriptions, from a number standpoint. I'm not seeing that yet.
Mm-hmm. No, that's a fair point. I think it's definitely business based. Companies like Disney, exactly what you're saying. They're losing their park side. They're cutting. That's where the jobs cuts are coming. They're not coming from the Disney Plus side. And so when you have job cuts in a business that's bleeding, that's I think 40% of their revenue. That's a terrible sign. And obviously, no matter what they do, even on the technology side, I'm just going to go ahead and say Disney Plus is like a digitization of their content, and ultimately, I think that's going to create it's going to cut back jobs in itself. I mean, obviously just some jobs are going to be created to go into Disney Plus, but that may cut jobs in other areas of Disney. Either way, I think it's definitely a business to business case, but you're totally right.
Yeah.
It remains to be seen.
Yeah, it remains to be seen. And I think, the interesting thing is I heard from someone that through this entire process of coronavirus, okay, the one thing that has sort of been a recurring theme is that the things that are happening in Europe, America is actually not too far behind. Okay. So what I stated earlier about European banks struggling, Paris, Spain, these other European countries already starting to go back into lockdown or potential, partial lockdown, whatever that you see on my headlines right here. America is not that far behind. Like,
Yeah.
there is no way that, we have, first of all, gotten over the virus. We just had literally the most powerful man in the world, our president, get the coronavirus. If the coronavirus takes no prisoners, even from the standpoint of literally affecting the president, that there's no one really that safe in America as people may like to think.
I just have a hard time believing we're going to lock down again. I think there are too many business people here, and I think his base would definitely get in an uproar even more so. And I don't think that he wants to do that before an election. I just cannot see a lockdown here. But I mean, the trend's exactly what you're saying. You would think if we followed the European model, yeah, we should be in a lockdown because let me tell you something. People are still over here in Houston acting like everything's perfectly fine. Like restaurants are packed to the max. I mean, it's like there was no virus, I promise you. And ultimately, it's going to lead to more cases, especially when it gets time for flu season.
Yeah, flu season's coming up. Coming back to the U.S., visiting these two different cities, Chicago, or actually three now, Chicago, Miami, and Indianapolis. The one thing that I'm definitely seeing is life has obviously completely changed, right? Everyone's wearing masks, people are social distancing, and I think that's great. Mm-hmm. But I think that I've been coming back to Chicago for a number of years. I've lived in Miami or close to Miami, for the last year and a half or so, prior to me leaving for Colombia. I did not at all see anywhere even close to 50% of the traffic, the foot traffic or capacity, whether it be restaurants, malls, even something as simple as a gas station, right? Like the gas stations that I used to see that were more packed, I'm not seeing that many people just there. So these are the things I think are still psychologically affecting people. And it may not be that we have to go into lockdown. It may be that the American populace has become smarter and they're saying, all right, well, I'm not fucking with this virus. So at least they might just be sitting back, a bit more hunkered down at home because just like you and I think the American public is becoming a little bit more knowledgeable. They're saying coronavirus is not going away. We got the flu season coming up. We literally just saw the president of the United States get the virus. So it doesn't have to be that we have to go into lockdown. It may just be that we go back into the mode of spending less, staying more at home, not going out and spending all that money.
Yeah, that could totally be a possibility.
So let's cover some other things, right? We talked about the market itself not really reacting to the news. Now, again, President, I think last week, Wednesday or Thursday, he got the virus, announced it to everybody, and obviously the markets melted down overnight, but then pretty much got bought up, the next trading day. So it seems like maybe the panic could have been more so the people and the journalists, but it seems like the financial world didn't really care, or at least not temporarily. What are your thoughts on that?
Yeah, man, I was so surprised. I thought, first of all, going into it technically, with these high growth stocks having to confirm, just in my process, you have to have 2 days above a resistance level to really confirm a trend. And this was going to be the second day. And so I was really paying attention to see if these high growth stocks were going to see that those sellers come in and keep that stock below that price, because that's usually what happens. And, coming into Friday, I was like, damn, futures are down big. And we just got a jobs miss. I mean, all the factors were right for a complete market meltdown. And to my surprise, I mean, there were just so many buyers. And I was texting you within the first 5 minutes. I was like, I have not seen such strong buying flow in a while. And I was seeing it like the volume was insane on so many stocks. You had companies like let me see, like CRM was one that really stood out to me. CRM had opened at 246, and literally by 45 minutes later, it was at 254. That's almost a 10-point swing. That's around 4% within 45 minutes. And so those moves on such a big company is insane to me. And ultimately, the stock actually closed down
Yeah.
2.5% versus closing up. But you saw that in regards to a lot of these high growth stocks. Same with Fastly, which was had broken above 102. I think it was at 102 earlier in the day after opening really badly, and it just seemed like out of everything to do good towards the end of the day, it was like the airlines, the really bad, the bad stocks. Technically, I think energy actually closed up for the day. Financial closed up for the day. Like, yeah, and oil futures were down 3%, and you still had energy stocks be one of some of the best stocks of Friday. It was just a crazy day to me, considering high growth needed to close above those resistance levels, and for the most part, they didn't. They dipped back below them by the end of the day, and just how the market digested things was it was just very weird. It was like an initial buy the dip reaction, and then you just saw just complete disparity between value sectors and high growth stocks. And it was ultimately clear. However you read it is your own choice, but I ultimately read it as a big negative, and just a mentality of this over complacency to buy the dip and maybe maybe the market was pricing in a stimulus deal. I don't know, but it's just over optimism, and it didn't seem to carry in the right sectors that I was hoping it would.
That's a really interesting point that you mentioned, energy stocks, XLE, because I think last week we had a report come out that oil demand is still down. Even though we've sort of curbed supply, right? We know that we're not producing as much anymore. We still have tankers, out all over the frickin' oceans, still storing all the supply. Yet energy stocks were, still doing relatively well. And that disconnect is, I think, the perfect summation of what 2020 is, which is a complete mindfuck. All the traditional things that you would look forward to in a market to be somewhat rational, they just don't play out anymore. Even something as big as the president getting the virus, first few hours of the market just said, we don't really give a shit, And then it started to roll back over, and you realize, is the market like digesting slowly this crazy news? Or, the way I was thinking about it, kind of from your standpoint, is I don't really think anything particularly great happened in the market. It's not like we closed significantly higher. I thought it was just like a down day doji right here, and kind of like yourself. So you look at two full closes above a resistance level. I look for one whole daily candle above a resistance level. So like, if you have a daily candle that breaks through the resistance level but doesn't fully open and close above that, then I require another full day of that candle being open and close above that level. And from the S&P 500 standpoint, I'm not really seeing that. What I'm really seeing is, okay, we have a high right here, maybe somewhat of a lower high right here, and another lower high. So have we really accomplished anything? Not really, right?
Yeah, exactly. I mean, that's why I keep telling people we could still be in a broader correction. And this was, this nice move that we've seen in the past week was just a rip in the market. And, who knows how low this market could go. I think there was like a really big bond guy, Scott Minard, who said it could go down to 28.50. He's really respected, but I haven't even tried to make any guesses where this pullback could go if it continues, because it's so early, and this market just doesn't seem to me like it wants to go down. I mean, you still see so much buying power in the morning, and ultimately the market still closed the week on the positive side. Granted, they didn't really close above any key resistance levels or anything like that, but for the market to be able to digest such negative news, it wasn't just President Trump's news, it was the jobs miss. For it to digest that to the point where they held up somewhat, they may not have been able to break out, but they didn't break down, and they definitely could have. I think that's a positive sign, and so it just really makes this market extremely tricky to try and guess in the short run.
Yeah, fair point. The other point that I want to talk about, you and I have spoke about this at great length, where I personally believe that Bitcoin, being a higher beta asset, in some ways it gives, some key indication of where um, the S&P 500 equity markets could be feeling from a sentiment standpoint, from a risk on, risk off standpoint. And what I saw, pretty much earlier on in the week was a forecasting of what was going to happen in the S&P 500. And you could see, right around, I think, literally Tuesday itself, the market started to roll over. And even though we had some bad news about like a CTO of one of the bigger derivatives exchanges, he got arrested. Sometimes when I look at that news, I don't really think that that is literally the news that broke the market. I think that okay, well, we're already in a downtrending market. The news kind of helped push over the dominoes some more. And so it seemed like Bitcoin was kind of forecasting, hey, wait a second, it looks like things are not as risk on as you may think. And when, again, beginning of the week we rolled over, and then the S&P 500 kind of followed, literally 24 hours, 48 hours later. I just thought that was kind of interesting. And even at current standpoint with Bitcoin, we're actually below a key level that dates back to September 2019. So I'm thinking if Bitcoin starts breaking down further, let's just say tonight as the futures open, or maybe even going into tomorrow morning, I'm thinking along the same standpoint as you is we might have a pretty rocky week, coming up ahead.
Yeah, I think the broad technicals definitely tell you that it could be a negative week, but once again, anything could happen from here. The market has still shown a lot of signs of strength, and really not too many signs of weakness. I think we just got that one terrible week a couple of weeks ago, and for the most part, the market's chopped up a bit. It's kind of where it was at when it had that the Nasdaq 10% sell off or something like that. So, it remains to be seen. But that's why it's so critical at this stage to just, I think, actively watch the markets day to day. I know a lot of people don't like that, but when volatility is this high, I think it really pays to actively manage, because it could really save you, a lot in the short run. And ultimately, if you're a long-term player, volatility is really nothing to you. But, we live in very volatile times, and some of the stocks that people buy, I think I touched on it a little bit Wednesday, these stocks that have gone up 500, 600%, y'all are buying them at very high premiums. And I get that they're still continuing to grow, but when you're buying them at these premiums, you could be buying them for the next 5 years of hyper growth. And what if they only have 3? What if they only have 2? So I'm not saying, that all your high growth stocks are expensive or anything like that, because for the most part, high growth can stay expensive. But from a long-term perspective, it's tough to be even a long-term buyer. Same thing with a short-term buyer. Bottom line is the market is pretty confusing right now. It's really tough to know what you pay for. Bottom line.
Yeah, totally agree. So what else should we be looking forward to the week ahead?
Well, so, there are a lot of underlying economic factors that are going into play. I think with Christmas season around the corner and some of the data that we've gotten from the housing and retail side in regards to the supply. So if you guys have been keeping up with the numbers, the demand in housing is actually not, or I'm sorry, the supply in housing is not keeping up with the demand. The demand has been so furious. And if you'll notice, actually, housing was the best sector this week, ITB. And I told people to get into DHI or I'm sorry, I didn't tell people, but I put out an alert for DHI on Friday. And I also made a video on Friday indicating that I really saw a lot of good technicals in the housing industry over the next 2 weeks to 4 weeks or whatever the timeline was. It was very short term. And this week, they were actually the best sector. They were up, I think, 6%. DHI made a new high. Lennar made a new high. I think Zillow did. ITB, the main housing ETF, made a new high. Ultimately, it's being fueled by the story that supply is not being able to keep up with demand. And these home builders are going to have to build, even more homes. And basically, their services are going to be much more needed, at least over the next year or so, especially with interest rates remaining so low. And you're also seeing that same thing from the retail side. Inventories are low. People have not back-ordered. And so ultimately, all this backstop, this bottlenecking, I think is going to be very instrumental for shipping companies and supply chain companies, whether they move lumber for the housing industry, construction stuff, or retail, clothing, material stuff for the inventory backlog that's supposed to pick up during Christmas time. So XPO Logistics, I think ticker XPO, they're one of the biggest logistic companies in the US. They have trucking, shipping, software assistance, all these different things. They are really going to be involved in this inventory pickup in both the housing sector and the retail sector that's, I think, going to span at least over the next 2 quarters. And this company, it's seen a 75% decline in earnings this year as a result of COVID really putting things to halt in their retail category and the housing category initially. But next year, their earnings are expected to jump 282%, and they're finally going to see revenue growth after seeing declines since 2018. So it's a really big thing. I think this company could be in tune for a nice turnaround over the next year or so. So XPO is my pure American play. Actually, they're international, but if you're focused on America and stuff like that, XPO is the one. And then ZTO is kind of the Chinese counterpart. I think they're obviously not as big as XPO, but they're a Chinese logistics company. And I haven't really done too much research about that. So that's just a name to throw out there if you're really interested in Chinese stocks like I am. Their economy continues to be one of the best. And so if manufacturing, most of our manufacturing comes from China, if they're going to see the logistic boom here, you'll probably see it over there. So those are 2 names I would keep an eye out on, just to go with that economic theme of high manufacturing and restocking of inventories for both retail and housing.
Okay, so ZTO, XPO, and DHI, folks, if y'all want to pay attention to that for the coming weeks ahead. I just thought it was really interesting, over the last several weeks, I've been watching housing in parallel with lumber futures. And if you notice, pretty much since the beginning of September, we've had a 30% drop. And I've been thinking about that. It's like, why the heck would that happen? What are the lumber markets seeing that the housing markets are clearly not? What do you think about that?
Oh, wow. I was keeping on a track on lumber in the short term. I did not look back, I guess, that far. Wow. I don't really know about that. That's a big move. Damn.
That's a massive move. And I think that missed a lot of people's radars. And I only pointed it out, maybe like a week or 2 ago, just briefly. But now that I'm looking at it, I'm thinking, wait a second, Fassel's talked about all these, different logistical companies or even housing doing well. Why the heck are lumber futures down? What did they see in the market that maybe these other, stocks don't? Just a thought.
It's very interesting. I think it's more so, I mean, damn, I would say it's a pullback, but you can't have that severe of a drop and it be a normal pullback because it's still above its pre-March highs. It's broken out to a very large degree. It went from 362 to 920 in literally 2 months. So I guess high volatility has to be in part of that because it's still above pre-COVID levels. And just based on where the housing stocks are trading, they're at all-time highs. They're some of the best relatively performing stocks in the market. And I think you can't have that and also have underlying issues. So I want to say that this lumber's drop is more so of a pullback that should be bought versus sold. But damn, it's on my radar. I didn't realize that it was that big of a drop. That's on me. Damn.
Yeah. Well, we'll have to definitely pay attention to something like this. And for our viewers, make sure y'all keep an eye on ZTO, XPO, DHI, and then of course the lumber futures if you are considering looking into the housing sector. Again, we don't provide financial advice. Me and Faisal are here to express our opinions, our views on the market, how we trade. Please make sure you consult a financial advisor if you are using any of our information to make a financial decision. I think it's been a pleasure, man. I think we've covered a lot of information here today. I'm very much looking forward for the week ahead. Any last notes from you?
Yeah, wait, let's make calls. So what do you think is going to happen this week? Just the final word. When we review over next week, I want to be able to say, okay, we were right on this or wrong on this. What do you think will happen this week?
I think going into election time, so the one thing that I've talked about Bitcoin is that in this area, I think going into election, I think we're probably just going to be in a range. Okay. Even if we're in a range, the possibilities for upside breakout for something like Bitcoin, very slim. And the reason I mentioned Bitcoin is, again, due to the way I look at the market is it's a very higher risk beta asset. So if Bitcoin is starting to break out and literally take off, or if it's starting to break down and completely collapse, I am fairly certain that equities will follow. Like, I'm fairly certain. But for now, what I'm more certain about is we're probably going to be in a range until election time. So that means that if I'm looking at the S&P 500, I think it's probably going to be basing out, if we sell off, somewhere around, I don't know, 32.30, 32.40, somewhere down here, you know. I don't think we're going to have an upside breakout. At the very least, I think we're probably going to break down by the end of the week. But yeah, that's the only way I see it.
Yeah, took the words right out of my mouth. Literally, I think we're probably going to see a retest of that lower end of the range where your cursor is, and ultimately, if I start to see the leaders and everything else break down beforehand, because that's usually what happens, then that's when I'll want to up my shorts, because then a breakdown seems more likely than not if the leaders are already doing so. So keep an eye on those leaders. They've really been some of the tellers of the market. So Nvidia, I'm sorry, not AMAT, ASML, Apple, just you guys already know. You guys know the list.
Yeah, for sure. And guys, if you want to come join our Advantage community, you can go to thealphatrades.com right here. You can hit the products page, join our Advantage membership. This gives you access to every single one of the lock channels. Faisal does tremendous, detailed updates here in the live equities updates. And then, of course, his stock alerts. And then we have a pretty active stock market chat. And, of course, along with that, for that same price for the Advantage membership, you get access to the crypto side as well. So all in one package. The final thing that I wanted to mention actually is what we just spoke about, the S&P 500 potentially making a retest of this low kind of sets up, in the perfect manner, because if you look at the Dixie right here, it's kind of bottomed out. And as we know, the way we look at the DXY and equities and Bitcoin, there's basically an inverse correlation. So if I see the DXY bottoming out and ready to maybe push up higher, then I'm thinking that the equity markets are probably going to break down. So just something to pay attention to.
Perfect.
All right. Well, great note to end it at. Thanks, everyone, for watching. Again, hit the thumbs up. Leave us a comment of your thoughts. Until then, we'll catch you soon. Cheers.
Peace.